Have you ever wondered how trillions of dollars magically appear in the economies of the world? Well, it's not just the Federal Reserve. As it turns out, it's all about understanding the banking system and how the markets behave to it. In today's video, we're going to break down why the S&P 500 continues to climb higher, how the breakout in semiconductors and indeed Nvidia may have more to go, and of course, why M2 money supply might change the way you think about certain asset classes right now. Guys, this one's not to be missed. We'll see you in a moment. Stocks, commodities, and cryptos. Let's get into it right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and boy oh boy do we have a lot to get discussing today. We've got the macro, we've got the data, and of course we've got the key levels that we need to be looking at as traders and investors. It was a pretty good week if you were in the right sectors, and in today's video we're going to be taking a look at why we were talking about semiconductors and whether there could be more to come. But let's kick things off with liquidity, because of course everybody is discussing at the moment the idea that M2 money supply is hitting all-time highs. And there are a lot of ways to break this down. So in today's video, we'll better understand how it affects certain areas and what it exactly is. Let's kick things off here with an all-time high though. M2 supply has been going up in recent terms. And of course, we always want to be paying attention to that, especially when you're looking at certain hedges. But we've seen all this before. Back before we actually sold off this year, we were at a very particular ratio, something we hadn't seen since 2000, which was where we took the M2 supply and the NASDAQ, and we worked out that when we hit this one ratio, we were starting to become overbought. Well, at the time of this recording, we're sitting at about 0.9, so there could be more to come in this rally so far. And this has a lot of people speculating that maybe we're in for another big euphoric breakout. But let's have a look at what M2's money supply actually is. Well, if we think of it as the fuel to tank the economy, basically this is a big thing where M2 equals M1, cash plus checking, savings accounts, short-term deposits, and money market funds. It's basically the amount of liquidity that can be then pumped into the markets itself. And often it's considered when M2 goes up, more liquidity is present and asset prices can rise. And when M2 goes down, there is less liquidity and risk assets cool off. Now, this is a bit of a simplified term. You've got to think of liquidity as coming from a lot of different areas. But today we'll focus on M2 because, of course, M2 does have some great overlays and offsets. And in particular, it's all about offsetting and lagging the charts for the supply. We see global M2 increase, and then sometime after that, we often see a reaction from markets. And you can see here the tracked global M2 lagged against the S&P 500 by 11 weeks. And what you might notice is that we've got a bit more to run if we continue to go up the way global M2 currently is. Boy, oh boy, these charts are absolutely ramping. And it's starting to have an impact into so many different markets. Now, one of my favorites for tracking M2 has always been the hedges against, in many ways, liquidity in print. Gold, Bitcoin, silver. You guys know I think that is one of the best trifectas this year against the geopolitical tensions. And of course, what we're just seeing out there, which is a huge amount of debt that's starting to pile up. But take a look here at the relationship between gold and M2 supply over time. If we then have a look at Bitcoin versus M2, you'll notice that generally we do see spikes. And recently, Bitcoin has been in a bit of the doldrums. It's been going kind of sideways and hasn't quite broken through to really getting towards that 120, 125. Well, there's all sorts of announcements coming out from the admin. We obviously saw the potential here for crypto, not just Bitcoin, but crypto to be used to borrow against for houses without having to sell it. We're seeing news on the weekend right now about XRP, which obviously that community is going wild. And we're seeing all sorts of information come out about crypto once again. And this has a relationship here where we're thinking gold often goes first, Bitcoin and silver often come second. And it could still be time for Bitcoin to potentially ride high with the M2 supply. So we'll look at that a little bit later, but do remember this is a huge reason why we've seen all three do well this year. Bitcoin, gold, and silver. We've been following and tracking these heavily since 2022 at the end. And obviously I've been a huge fan of all three this year in particular. And you can see here that they're all starting to kind of equal out in terms of their overall percentage gain. Usually Bitcoin will be a higher Sharpe ratio in terms of you'll end up getting more return. But the main thing here is that gold obviously has outperformed everything so far. So will we continue to see catch up from silver and Bitcoin? Well, I guess the answer comes back to, do we continue to see M2 supply go up? Usually it's offset by about 10 to 16 weeks, and in a future video, we will have a look at that one together. The offset for particularly Bitcoin, and then the offset for gold as well. Now let's go back to where we are. So we've seen the markets rally up. We know that the S&P 500 likes a good bit of liquidity, and we know that people are getting euphoric again. And it really brings up the question of, are we here? Are we here? Or are we nearer to the end in terms of the rallies? Now, I've often speculated, I believe we're somewhere around 1998 to 1999. So basically, my opinion is we're closer to the end of the current AI run, that is the hardware phase, and we are probably moving into the potential speculation euphoric phase that may go badly. But that if we are in the 96, 97, which is the most closely correlated for many people, then we've got a lot more to go. So which one are you? Are you a 96, 97, a 98 optimist, or are you more like me that thinks it's more like this type of thing, which is starting to get a little bit euphoric? Of course, my thought process on that is really back to where we were in 2021. And that was that we saw IPOs coming out and we saw them absolutely going crazy. And of course, that's exactly what we've had here in 2025. The beginning of VC-backed IPOs coming back into the markets and getting exceptional returns. And the big one here recently has been Circle, which has gone up 632%, since then crashed about 30%, and then started to recover once again. But obviously, it has done an exceptional job. And I always have like kind of the same rule, and I'm sure you guys have been following for a while. You know that I've said this since 2020. And I've said this actually before then, but of course we weren't on YouTube. So what it was is that when you see an IPO, if you're early, fantastic. If it's tech in the US, if you rally it through the first couple of weeks into months, you often do get exceptional returns, but then it tends to be lackluster for around 12 to 18 months. And then if you really love the business, it tends to come back. Have a look at Hood, have a look at Meta, have a look at Twitter when it first went on the markets. All of those types of things, you'll see it time and time again. And this brings me to the question now, and I guess the question we're all asking is, how much longer can euphoria go for? Well, Jurrien Timmer here has a pretty cool chart, and that is that he's seen this before. And obviously, whenever we have a 20% drawdown, we can start to mark, okay, what have been some of the most aggressive recoveries of all time, and can they turn around? Now, this comes back to a few other charts that we've had recently. If you go back through our library, we've got one that particularly shows the US presidential cycles, and when we see huge reforms or changes, often that period between 200 and 250 days of the first year of the presidential cycle, we basically get that kind of secondary dip, often off a V-shaped reversal. Now, will we see that again? Well, notice here that we're back at the highs. I think it's the third fastest pickup of all time, and it's a really, really big ripper. Now, it can go well. You can see here, there is one where we continue to mark out very good gains and end up another 15%. There are a few others that have come up pretty quickly and then also moved up, but there are also a lot that turn at this point and potentially go down. You can see the highlighted kind of methods here that Jurrien has, and he's got a couple that look really excellent, and he's got a couple that go sideways. And to me, it's probably more the sideways or the down one that kind of looks more interesting at this stage. And one of the reasons is because we know that 2025 is going to be choppy. We knew that at the end of 2024 on this channel, and we've talked about it all year. It is expected to be an up, down, and all-around market. So for next earnings season, which is coming up soon, I would say that is going to be the real tester. Why? Because we're going to find out a little bit more about whether inflation is coming back. I kind of feel like we've hit the lows here on inflation for now. And that's due to, of course, the tariffs. But also, are the tariffs having an effect on the companies yet? So it's a mixture of AI doing well for the businesses and, of course, tariff potentially doing poorly. We just do not know the answer to that yet. And, of course, that will be a very interesting next couple of months. We're not far off the next earnings season. So how does the market react to invasions, wars, these kind of geopolitical problems? Well, as we already talked about, we often do see pickups, at least initially in markets. And this is often what does happen. We see a bit of a rally, and then sometimes that rally can kind of go bad. Now you can see here there's quite a lot of rallies that go bad as well in these examples. And when you actually look out further 2 to 3 months, you often see a dipping process that does come through there. Now I would not back anything based on these charts here because it's not enough. But we do know that at the moment, the markets look incredibly strong. As we've talked about over the last week, as we broke through that 60-60 zone, the markets were in full squeeze mode. So many people are caught offside, hedge funds completely underinvested, institutions panicking and starting to panic buy, and the most important sector in the market, semiconductors, almost at an all-time high. And that is pretty damn sweet. We thought Nvidia would rip when it started pulling through, and it certainly has so far. Is it set to continue, though, into what they call Christmas in July? The first 2 weeks of July, notoriously good. Well, according to Wayne Whaley, in similar situations, you can see here that there is a pretty good likelihood that we could put in some pretty nice gains. Now, you'll notice here there are, the occasional negative. Of course, Trump could do something and say something and completely destroy some of these stats. But realistically, we do know that we have a very, very good run traditionally over this 2-week period. So to go against the market right now with an all-time high and, of course, pretty strong closes, that's going to be tough. And as we've seen, bears and people that have been offside recently have really been getting hurt. Foreign demand also is actually higher than people think. Foreigners are still buying tons of US debt. Now, we often say if it's in the press, it's in the price. And recently you would have seen a lot of articles saying that no one wants treasuries anymore. Well, in April, people wanted treasuries again. So people are still willing to buy treasuries. Do not think that what you read often in the news is going to be the best trade. And it comes back to also options for things like Brent. Obviously, everybody has been going super bullish on oil contracts. If you were early, made sense, the markets went up. But as we shared, the general gist is we see markets move down, we see re-escalation potentially, and it goes back to the high. And then as it de-escalates, oil gets absolutely smashed back down. And that's exactly what happened this time around again. And you can kind of see why as well. Speculation from everybody was to buy oil contracts. And boy, oh boy, is it a massive spike. It's like the biggest oil options market we've pretty much ever seen. And it's just absolutely massive. Everything is exacerbated here in 2025. If you want to get into a hypergrowth stock like Circle, it goes up probably 3 times more than it's worth and then starts to crash back down. If you want to get into something like Palantir right now, you look at the ratios and say whether you think that's worth it. What you'll get into in 2025 is going to be a massive, massive momentum move. So remember, expect the unexpected and also go with the idea that the market will do as much as it can to make as many people seem as stupid as possible. Now, speaking of big trades, we did see a couple this week on Friday. We've got a third largest dark pool trade since inception for treasuries. Could that be a sell on treasuries? Is it a buy? We don't know yet, but we'll be watching the price action. And obviously we got some monsters through Google, particularly Google picked back up off that 7th largest trade. We've now seen the largest trade historically, massive trade coming through here for Google. So is that a buy? Are people starting to see it for maybe the data play, maybe the cheap fundamental play? Certainly a monster coming through there. And then, of course, we also have a couple of other big ones, and a semiconductor trade came out of nowhere as well. 3rd largest. Is this something that's going to be like a short or something? What are we going to do here on semis? This is a very interesting chart. You can see how the reaction of the previous ones has been fairly swift. So probably watching this closely along with normal price action. Now, in terms of seasonal patterns, we already know that July, first 2 weeks, notoriously good for the NASDAQ. The NASDAQ then often weakens off a lot of the time when it comes to the August, September, October period. That's often where you get that dip. And then we usually get a great Q4. So Q4 is usually really good. Q3 is certainly a question mark. That's going to be the one where everybody's worried about growth concerns, I would think. And this is going to be the time to watch markets. And one of the reasons is these hedge funds, they are so far behind. Like institutions caught off guard, similar to 2020. Retail traders, absolutely smoking it. Why? Because you guys have been buying the dip like it's out of control, like there's no concerns in the world. And sometimes they say a little bit too much information is a little bit dangerous in this case. And I think what's happened here is that people have really felt emotional about 2025 from so many different reasons. And why wouldn't you? If you watch the news, you're going to be freaked out all the time and totally concerned about everything. Whereas, as you can see, some people have just been buying the dip saying, don't worry, the Fed's got us, or the US government's got us, or something like this. But this is the lowest positioning in 12 months. And that will probably mean that there's going to need to be some volatility by the market so that these guys can start to buy back in. But do remember, these hedge funds are off guard. So that basically means that there is a possibility here that we see some form of buyback. So that could be like a dip similar to the 2020s. Now, where do they traditionally dip to? Well, so far we've been spiking the daily 20 moving average, and we know that that is currently the best level. 60-20 approximately, if the markets came back down to it, would be the most bought kind of zone. The other thing that we're going to be looking at though is the weekly 20, what we call mean reversion. And you guys can see here, as we went through that tweezer, like we said at last weekend's video, if this happens, a mega squeeze will be under place. And that's exactly what happened. Why? Because people are caught off guard, there are shorts, and the markets love to make a lot of money. So yeah, heaps of people would have shorted this tweezer. It's a pretty rare pattern. It looks super bearish. It's one of the most bearish looking patterns initially, but it just didn't manage to hold any lows. Went off and then of course started squeezing against that. We do have a bunch of stuff here, but do remember the weekly 20 is a notoriously good level. And at the moment that finds ourselves at about 58.33. So if we do get pullbacks, you're going to be looking at that weekly 20 probably the most of anything out there. In terms of options high and low levels for Monday, you guys can see what we've got in terms of these zones. And clearly there is a little bit to pay attention here. 60-20 is going to be one of the most traded areas, so this is going to be important. It's also the daily 20 if it does come down there. But what's the reason to say there's a short here yet? We just don't have it. Now, some people might say, oh, I see a short, I see some form of MACD divergence or RSI or any of those things. They'll always show in these types of situations with the series of higher highs and higher lows. It's probably not enough to go off yet, but of course we will be paying a lot of attention to it. And one of the things we'll want to pay attention to are going to be the options. Take a look at his 6,200 now, a monster call wall, massive amounts of options on that expiration there for the 30th of June. So a huge amount of options expirations on 6,200. We do know that 6,200 then starts to be big for all of the next ones. And of course, if we break 6,200, you've got to think we're going to move towards 6,250, 6,300, etc. So it's all going to be about that zone. We also want to look at some of the biggest options traded stocks. So one of those has been Tesla, and it remains pretty similar. It looks like the 320 put is not as strong this week as it was last week. So that opens up the idea that Tesla could move down to 310, 300, probably 300 if it's going to move down. But the same thing happens on the top here, 340, 350. And look at this, a cluster of calls. If we get through, next stop, 380 seems to be the most likely. So Tesla, it's stuck within a range. 320 is the first little sup, 300 is the next one. And we just don't know quite yet whether the bulls want to be able to control that. 350 plus is going to be a very strong level though, indeed. And that's similar to what we said about NVIDIA. You get through 145, push the 150, 150 plus start to really ramp. And that's exactly what's happened. Now we've got 160 for this week, but realistically, there's a lot of calls that are now in the market. We're in positive gamma for NVIDIA and everybody's talking about it. Now that can both be a great thing and also a curse because what I'm seeing across the board is upgrades. Wall Street just randomly have upgraded the stock from 170 to 250. You've seen all sorts of people now calling for 300s. You know, people really get carried away as soon as you get a breakout high. But just remember, we're still making a series of higher highs and higher lows across the market. Now, just before we jump into the charts and we take a look at the lead indicators and, of course, the key levels that you should be looking at, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, you guys know we've worked with Tiger a lot over the years, and that's because they keep winning awards and they keep listening to feedback. And you know I love listening to feedback. You guys have shaped this channel and shaped some of the things that we also cover here, so it's awesome. And they've just won even more awards. Take a look at this. They've got 4 big awards here now in Australia from some of the most recognized review companies. And of course, they're offering a special deal for members down below. You can click in the link, description, and pinned comment to check it out. But just some of the things that Tiger Brokers offers are really phenomenal for the viewers. One of the big things here is you guys can get access to chess sponsorship in Australia. If you're in Australia, you'll know why that's important. And of course, you get access to very cheap FX fees. And to get into some of the best markets in the world right now, which are obviously the US and other global markets, you need to be able to transact into other currencies. And that's something that you can do there. The other thing I really like about Tiger Brokers is they keep opening up more stocks for after hours trade. One of the toughest things to do, especially in 2025 with Trump making announcements and all things going on, is to actually get involved in the markets at the right times. And you can do that with access to 9,500 plus stocks and ETFs to 24/5 trading. So what are you waiting for? If you think Tiger Brokers could be good for you, check out the links in the comment section and pin comment down below. And yeah, check them out today. All right, let's get into the US M2 money supply. Now, this is the traditional chart that most people always look at. Basically, it's a series of highs, and we saw a massive rally throughout 2020. A lot of people attribute this to some of the reason why we had that huge rally into 2021 and why we inadvertently started to see a bit of a sell-off in 22 as well. Now, of course, there were inflation and other things going on, but you can see it really turned about April of last year. We started to see huge amounts of rallies. And now that we've made a new high on US money supply, people are getting very, very excited because this often is kind of brought together with Bitcoin. Now, we will put that in a new subsequent video, but one of the other things is it's not just US money supply, it's global money supply. So global money supply has really been accelerating heavily, thanks in part to China's stimulus. If you've been watching the channel for a while, you guys would know that last year we started to get very bullish on China, and it's actually been a very good performer. Maybe not in the last couple of weeks and months, but certainly an excellent performer over that period of time. And that's because global supply is increasing. So with this moving forward to a new all-time high here, what do we have in store for the markets next? Well, one of the things that we're always looking at is, of course, what's going to go on with treasuries. And this is something we're really paying attention to very closely. And of course, we're going to also be paying a lot of attention to yields, as we do expect potentially Trump to shake things up with maybe changing who is the chair of the Federal Reserve. And of course, it looks like Powell might be on the way out and maybe someone new will be on the way in. And what's expected is quite a lot of rate cuts. Between 6 to 8 rate cuts could come through. And this is going to have huge impacts into treasuries, particularly I feel like in Q3 and Q4 as more people start to speculate on this. Are you speculating on treasuries? Of course, it is a guess at this stage, but some people are liking it because, of course, treasuries are starting to rally up. Let's also now take a look at option spreads. You can see here they've still continued to plateau, so no real concerns there in the options market. And the US dollar, as you can see here, continues to decline. So what we're seeing is a mixture of yields down, dollar declining, people starting to pull back into the US markets as they start to look attractive, IPOs up, speculation up, semiconductors going up, and liquidity up. So people are feeling really, really good about things. But as we saw with Drury and Timmer's charts, yeah, there's a couple of cases that go good, but there's actually more that go sideways and a little bit down at these rates. So although the market still is free flowing and things are looking good, you have to keep an eye out for this market because, of course, it's rallying right now and everyone's loving it, but there's a good chance that there is a dip somewhere in Q3, Q4. And of course, that will be more, how do you approach the dip? Do you want to sell into it, or you just want to leave a little bit of powder so that you're ready for those types of things? Possibly that could be worthwhile considering. Let's now take a look at gold. We can see here that we're coming back down. Gold has been underperforming. Now, I still think gold's going to do pretty well thanks to M2 going up and central banks purchasing and all sorts of things. But the key level this week is going to be 33.53. So if it gets above there, that's going to look good. Silver was a bit of a disappointment on Friday. You can see here it sold off, but it's still holding up. So what that means is that we've got the possibility here of a bit of an inverse head and shoulders pattern. We've also got a head and shoulders pattern on the higher time frames. So there's definitely a fight here. Now, you guys know I'm more bullish than bearish on silver. I'm not opposed to 34.50 being a good zone for silver to come back down to after that big rally before, but I'd love to see it spike back up here. And I think as we get more clarity on Monday, we're probably going to find out ideally which direction this is going into. US oil, still no updates, guys. I'm looking for it. I knew it would stabilize around here. I had a suspicion between these two zones, but no bid yet on oil, so we don't know it's going to bounce through that just yet. What about energy stocks? Well, energy stocks have actually fallen off recently, and you can see here they didn't get above that close very bullish. They kind of came back to that most traded zone. So this was a little bit of FOMO, I feel, in the markets in terms of everybody was thinking oil would go up a lot, and that's not exactly how it's played so far. Another one has been Tesla. Tesla hit 350. We knew that was a call wall. It failed to hold above it. It's come back to 320. Just remember, you've got that kind of 300 zone now as the buy level. You've got where it is right now, which is neutral. And then, of course, you've got 350 plus, which opens up 380. So based on the options alone, that's the kind of levels we would be looking at. When it comes to Nvidia, it's just rally. I mean, there's no reason to say this is going down yet, and most people are just feeling very, very bullish about it. Now, there could be news that comes out that takes this off or something, but for now, you're not going to look at this chart and say, wow, that looks really negative. Take a look at the weekly. It's a very strong high close weekly. So it kind of insinuates that even if there's pullbacks, there's going to be a buyer somewhere here. When we take a look at HSI, you can kind of see this Chinese market's continuing to barely kind of crimp up there. It's coming up to the strong resistance, and I would actually like it to find some consolidation here and then possibly break out after that. All right, let's look at the next chart, which is the US 2K. Pretty strong, but still US 2K behind. So small caps and mid caps have not really gone. It's been all about big caps and companies that are either memes, IPOs, or don't make any money. Yeah, you heard me right. Literally anything from 2021 has generally been going very strongly. And of course, the large caps, these ones have been doing very, very nicely. So it hasn't been the time yet to be looking at the mids and smalls. Although if you have been in the US 2K, it's still climbing its way, hopefully towards 2290, that kind of area. NASDAQ still rallying, series of higher highs and higher lows. Yeah, no real reason to say this thing's negative yet. It even bought up into the close. So realistically, it just seems to be, really about kind of going up at this stage. And we're looking to see if there's a pullback around the corner. Ethereum hit the most traded zone, which we knew would probably be a bit of resistance, guys. That's 2,500. And we're consolidating. So I think we'll get a pretty big break up or down here for crypto. Crypto is starting to get a lot of heat in it. People are really feeling XRP. I've seen that community going absolutely wild over the weekend on all bunches of speculation. But yeah, we still haven't seen really a breakout from there. And you can kind of see here as well, Bitcoin is consolidating. So what these are is they're coils. They're a pullback in time, as we have to call them, or a pit. And effectively, they're a point where the market has found equilibrium. It's at a fair zone. It doesn't know which direction it wants to go to yet next, but generally when they do break, they break hard. So this one's going to be interesting. If I had to guess, I'm going to be a little bit optimistic because the M2 supply is up quite a lot, and offset, it still does look pretty good for Bitcoin, but anything can happen. Let's go with the news then and find out what's happening there. The big stuff is going to be pretty much Jerome Powell. He's coming out on July 1st, have a little chat, 8:30 a.m. New York time. But I would say the big one's just jobs numbers. Don't worry about any of this stuff. Nothing here. It's all going to be about the ultimate, which is going to be the unemployment non-farm payrolls. So this one here is going to be huge. And depending on what happens with jobs numbers, we're going to find out a lot about the US market. Are we seeing a weakening jobs market? Will that cause the Fed to be needing to do more cuts? My guess is the weakening jobs market is just around the corner. AI driven, that is, people are sacking. I mean, we saw Microsoft sack more people. I think Tesla did as well. I'm not too sure about that one, actually. I think Microsoft did 7,000 or something. People are getting taken out by AI, and that's going to mean that the dual mandate needs to be considered. Inflation doesn't look like it's there yet. So will the Federal Reserve just be forced to do more cuts? I think that's what the market is going to be asking for, or it could go down. In terms of this week, make sure to follow us on X. Definitely check out some of the other stuff we do if you're interested. Looking forward to seeing quite a few of you on Wednesday this week. If you've been signed up to our free Melbourne trading event, there's probably about 2 left if you're interested in getting involved. You can still sign up and I'll send you out a thing for it. But that is going to be an awesome event. Otherwise, guys, thank you so much for watching. Check out the sponsor of today's video. It does help us out. Linked comments, description down below, and pinned comment. And we look forward to carrying this market and having a look at everything this week. Also look forward to doing some of that offset charting for Bitcoin. Hopefully the M2 kind of holds up, I guess, for the bulls, and for the bears, you guys just want some absolute escalation of something, or something kind of happening for Trump, because unless that doesn't happen, it doesn't look like this market has a bear in it just yet. Bye for now. Catch up.